bulls don't care if we get a reversal up from above 14 or from below 14, but they want a reversal up and they want a good buy signal bar. Can you sell at the market here? Now, I think if you're selling, you sold below 17 or 18. I don't want to sell here. This is a price where bulls might buy 14 high, 14 low. When the market's in a bear channel, it's better to sell rallies than to sell at new lows, because if it's in a bear channel, bulls tend to buy at the old low and buy more lower, and they usually make money. I put this here because it's important. Today could be an outside down day. Yesterday was not especially big. We went above its high, reversed down, so we may get down there. When we were up here, I said, I don't remember, I said maybe 30% chance it'll be an outside down day. Right now, what's the percentage? Maybe 40% chance it'll be outside down. But if we get one or two more bear bars, then it becomes 50 or 60%. Will we collapse below 14? Everybody's taking quick profits, and therefore there are not a lot of trapped bulls. Most of the bulls get out with a limit order during 16 or with a stop order below 17 or below 18. So it's not like there are a whole bunch of bulls who will be shocked if we drop below 14. Chances are we're at support. Chances are there'll be more buyers than sellers around the 14 low or below 14. But if 20 is a big bear bar closing on its low, if we get consecutive closes below 14, that would make it likely that today will end up outside down. You'll start to get traders selling at the low if it's converting into a stronger bear trend. Consecutive bear bars closing on their lows and below 14. Good bar for the bears. Can they get a follow-through bar? Can the character of the day change? Will it become more strongly bearish? Or will there be more buyers than sellers here? One of my general rules is if you have a wedge, here we have a wedge 14, or any kind of a setup where there's an obvious place for stops, 50-50 chance if you run the stops, the breakout will fail. 50-50 chance the breakout will be successful and you'll get some kind of a measure move down. So right now, 50-50 chance the breakout below 14 will fail. But the bulls need a good buy signal bar, especially after 4 bear bars. Bears, all they want is the absence of a bull bar. They'd like to get a second consecutive big bear bar, but all they're trying to do is avoid a bull body. And then they hope the channel continues down to below yesterday's low for an outside down day. Many traders right now are waiting to see what 21 looks like. If it closes on or near its high, they'll take a chance it's the low of the day, they'll buy. If it closes on or near its low, they'll take a chance, they'll sell the close. If it's not clear, if it's a bull bar but a fairly conspicuous tail, they'll wait for a second bull bar. The more it closes on its high, the more bulls will buy. The bigger the tail, the more bulls will wait. Bears, I'd get out above a bull bar closing above its midpoint, or a point above any bar. That small body and that tail will reduce the number of bulls buying above 21. A lot of the bulls will wait to see if 22 is a bull bar. Bears, I'd get out above 21. You can always sell again if we get a bear bar 22. So far today, the bull buy signal bars have been bad, 9, 14, 21, and the sell signal bars have been good, 3, 11, and 17. And the result is a bear trend. Bulls, if they are buying above 21, they're buying for a swing. You're buying a bar with a tail on top after 4 bear bars, so it's a lower probability sell. If you're taking low probability sells, you need very good risk reward to make the trade work, make sense mathematically, and that means you need a big reward. So it's not a scalp. "60-minute moving average, a magnet." But market, they bought at this price area yesterday a lot. So chances are we're not going to go outside down. But 1 or 2 more bear bars, then chances are we will go outside down. Micro double bottom, a wedge 614, a failed breakout below the wedge 1614. Reasonable to get out of shorts. Possible low of the day, so it's okay buy, but only for a swing. Bears hope that we get a lower high, and instead of a lower high way up here, they're hoping we simply fail at the moving average and get a low one on 23. If 23, right now the bulls, their stop is below 21. Some bulls will buy more lower, scale in as it goes down. Other bulls will get out below 21. Or if 23 is a bear bar closing near its low, they might get out below 23 because it would be a low one sell signal bar. Now, bulls buying above 22 are hoping that this is the low of the day. They want to see bullish activity. They want to see bull bars closing on their highs. Big bull bars, they want to see closes above the moving average. And if they don't see that, they'll get out, possibly with a scalp, possibly with a small loss. The 4 bear bars, the tail top of 21, those mean the bulls are not yet all that strong. Disappointed bulls, so some of them are getting out, excuse me, around break even, small loss. Remember, a lot of the bulls who bought wanted this to reverse up sharply, and so far it's not doing that. So a lot of them get disappointed and they exit, and then they just wait for the next buy. They might buy above 23 if it closes on or near its high. In the bears, it's a low one, but it's different from the other low ones. Well, it's different from 17. It's similar to bar 8, forcing traders to sell just above the low. That will reduce the number of bears selling below 23. If you were watching, you saw that little bounce back above the 22 high. That allowed the bulls to get out at break even. And you can see it went briefly above the 22 high again and then reversed down quickly. And that tells you that a lot of the bulls who bought sold out. I did buy and I did sell out. And I'll wait for another buy or for another sell. I don't want to sell at the bottom of a bear channel. So right now I'm back to flat. Low one, but similar to 8, you're selling at the bottom of a bear channel. And there have been buyers at new lows all day. So if you're taking it, you have to be betting that the character of the market's going to change, that it's going to become more strongly bearish. So you sell hoping we collapse. But if it does not collapse, you buy back your shorts, just like the bulls who bought above 22. They wanted a sharp rally, did not get it, and they sold out of their longs. I have the measured move drawn using the 14 low. We also have a double top 10 and 17, so I could redraw the measured move using that. And whenever you have a double top, you got to be thinking about a possible measured move. I always look at the lower of the two highs first. And if it gets below that target, then I look at a measured move based upon the higher high. Bulls hoping for a high two bottom, a second reversal up, but they need another good buy signal bar. This is 24, the end of the second hour. It's the entry bar for the double top. So we have a double top, a sell signal bar, and this is the entry bar. Accelerating down, more bulls giving up. Now, what are the chances of it becoming outside down? We're breaking strongly below an attempt at a bottom, so we should get a couple legs down. And right now, probably 60% chance we'll go outside down. Sometimes the market will race down to yesterday's low, and before breaking below yesterday's low, it reverses up. So almost up, almost outside down. So as strong as this is, if we get a reversal, traders will buy it. Almost outside down. Went above yesterday's high, sold off relentlessly, but got near yesterday's low, reversed up, bull reversal day. Collapsed like what we're doing today, but could not get below yesterday's low. Reversed up, bulls will buy above a pretty good bull bar. Extremely strong sell-off. It was a test of yesterday's low. Did not get below yesterday's low. We got a bull bar. Bulls will start to buy above bull bars. Big sell-off. Could not get below yesterday's low. Buy above bull bars. So bulls need a decent bull bar 25. This is a pullback to the 60-minute moving average. The 60-minute chart. The bulls are hoping we get a double bottom. Bears have a double top. And the bulls hope that we resume up. And bears are hoping this double top breaks below the neckline and we sell off. This is so bullish. It's more likely that we're going to go sideways than down. Bulls need a good buy signal bar. They're hoping this is a bear trap. You can call it a second leg trap, first leg a wedge, and then a bear breakout. But they need a good buy signal bar 25. Very common in a trap for the second leg to be a wedge. Very common in a trap for the second leg to be a wedge. I'm sorry, very common for the first leg to be a wedge, and then the second leg to be a breakout below the wedge. Here, just a big sell off, first reversal, second reversal. A lot of traders wait for the bull bar closing above its midpoint or a bull bar closing near its high. Second leg, bear trap. Trying to get a wedge bottom, a wedge bull flag, and we got a bear breakout. The bear breakout failed and reversed up. So the first leg is the wedge, second leg is the breakout that failed. First leg is the wedge, second leg is the bear breakout that fails. But the bulls need a bull bar 25. Here, two legs, one, pullback, two. Big bear breakout. Probably we'll get a second leg down, but sometimes it's a trap. It traps traders into thinking we're going to get a second leg down, and instead we reverse up. Tried to get a wedge bottom, broke below it, we have follow through. So at that moment, it's likely we're going lower. Instead, we get a bull bar, and this became a bear trap, trapping bears into what they thought was a bear trend. Instead, it reversed up. Tried to get a wedge bottom. Instead, we broke strongly to the downside. And instead of getting a second leg down and a bear trend, we got a bull bar. Traders will buy the reversal up. Bulls want 25 to close on its high. If it's a bull bar but does not close on its high, bears will exit, and some bulls will buy, but a lot of bulls will wait to see if the next bar is a bull bar closing on its high. Good for the bears, bad for the bulls. So I would not buy above 25. I would get out of shorts a point or two above 25. It's a low one, but the stop for the bears, if you sell, I did not sell below 25. If I did sell below 25, I would get out a point or two above 25 because of the possible bear trap pullback to the 60-minute moving average. There are many ways to draw the measured move. Right now, the breakout is 24. We had a breakout 20. We have a more convincing breakout 25. So 21 becomes a better point for a measured move. And it could be from the double top, or it could be from yesterday's high. So far, not a lot of bears selling below 25, despite the very big bear bar 24. The bulls wanted 25 to be a bull bar, but sometimes the bull bar comes a few bars later. So right now, the bulls are simply looking for a bull bar closing on its high, preferably with a decent-sized body. And the bears are trying to get this to be an outside-down day. I talked about almost outside down, but what happens if it becomes upside down? Most of the time, upside down days do not become big bear trends. They can, and if the initial range is not all that big, you have a better chance of the market continuing down in a big bear trend. So yesterday's high, yesterday's low, not a very big range. We broke below yesterday's low, and we fell for more than a measured move. Same thing here. Yesterday's high, yesterday's low, yesterday's range not very big. When we broke below its low, we kept going down for a big bear trend. Another example, yesterday's range not very big. But the bigger yesterday's range is, we still got here, we got a lot of examples where it fell far below. But if yesterday's range, the bigger it is, the less likely you're going to get a big bear breakout below yesterday's low. The more likely it'll go a little bit below, maybe form a trading range, a little bit below, a little bit more below, and then sideways, a little bit below, kept going below, but sideways. Same thing. Right at the end of the day, outside down, not much time to go much lower. End of the day. Okay, so outside down day, we're below this measured move, so then you look at the next choice for the top of the measured move. So double top here. So it looks like some buyers at yesterday's low. Some of them might be bulls taking a chance that we're going to bounce, bull scalpers, and some of them are bears thinking that the goal was yesterday's low. We achieved the goal, take some profits. Traders are selling, that's why the bar looks like that. Will we go a lot lower? I still think it's more likely we'll enter a trading range. But bears are hoping, the bears are hoping today will be like this. The bars here are not all that big. So you don't get exhausted bulls. It's not as climactic. Today we're getting some bigger bars here and here and here. And when you get bigger bars, you tend to get exhausted bears, and they tend to take profits and wait for rallies to sell. So that increases the chances that today will be a trading range instead of a continued bear trend. If you're going to get a small pullback bear trend that lasts all day, you want to see smaller bars and you want to see some pauses along the way. That reduces the chances of exhausted bears. Here, you got some big bear bars, and it kept going down all day, but it was mostly sideways. It was sideways to down. Big bear breakout, a lot more collapse. We got a midday reversal. It's hard for a bear trend to last all day if you keep getting big bear bars. Usually you stop going down and you start to go sideways. Sometimes you get a reversal. A lot of smaller bars, a lot of weak follow through. A day like that can last all day. Small pullback bear trend lasting all day. This is right at the end of the day. Sideways for a couple of hours. Sideways for an hour or so, sideways to down. Bigger bars, climactic behavior. Exhausted bears, sideways for a couple of hours. So that's more likely that we'll go sideways for a couple of hours. Bears, that tail is mostly bears buying back shorts at yesterday's low. We're still testing the 60-minute moving average. Even though we're 10 points below it, 10 points is nothing on the 60-minute chart. So a lot of times you'll get a pullback. Here, we were 20 points below it, but it was just a pullback. Whatever that is, 5 or 10 points below, just a pullback. Here, 10, 20 points below, just a pullback. So just because it's 10 points below does not mean it's a big breakout below the 60-minute moving average. So far, it's a small breakout. Try to get a bottom, 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 and then big breakout. So possible measure move down from the entire wedge. Not much lower. That's the low from a couple of days ago. I don't think it's important. I'll get rid of that. 27, a bear bar closing around its midpoint. It's still sell the close, but it's not sell the low. So traders will sell below bear bars closing near their lows, 25, 26. And then you get a bear bar with a big tail. Traders still will sell, but they'll more sell the close rather than below. Probably buyers not too far below that tail. That tail represents buying. We went down, we went up. We're down at that price again. Traders might buy again. We're also testing yesterday's low, and we have that measured move target just a little bit below. So we're in an area where traders might start to buy. Bears buy back shorts. Bulls start to scale into longs. Can we get back up above yesterday's high? Sometimes it'll go outside down and then back above yesterday's high, outside up. But that's unlikely with the number of big bear bars that we've had today. So the best the bulls can probably get is a bounce somewhere up into the middle of the range. Most likely, we're going to evolve into a trading range soon. You can see some buying. They bought the 27 low for a scalp. We got a little bounce. They'll probably buy the 28 low. Can you sell on a stop below 28? I would not, despite all the bear bars. We have 6 consecutive bear bars, but tail 27, tail 28, measured move target just a little bit below. And bulls made money buying 27 low. So they'll probably buy the 28 low as well. Bears, I'd get out a point above a bear bar. I'd get out a tick above a bull bar. And the bulls are hoping that this is the end of the selling. They know if we get a reversal up, it'll probably lead to a trading range. So the first reversal up will be minor, and bulls will be looking to scalp. Bears, it's climactic, so they'll probably wait for a couple legs sideways to up before selling again. I mentioned that the market sometimes will go outside down and then outside up. Usually does not happen when the range is big like today. Here, almost outside up. Actually, no, here's yesterday's high, yesterday's low. So a big sell-off and went back above yesterday's high, but yesterday's range was not very big. Outside down, outside up. Good buy signal bar, 2 or 3 bull bars, higher probability of going up. Small range yesterday, yesterday's high, yesterday's low, outside down, and then outside up. And today, that's not what we have. We have a big enough range yesterday and a big enough sell-off so that we're probably not going to be able to get up to yesterday's high. And therefore, if you're a bull, you're not looking for a big bull trend. You're just looking for a tradable bounce. Might be forming an II. Sometimes you get a sell climax and then consecutive inside bars, and then you get a reversal up. More traders will buy above 30 if it closes on or near its high. Sell climax. When it's strong, more often than not, you'll get a small second leg down before it goes up, and the first reversal up will be minor. Here, microdouble bottom. I talked about the II bottom. I know I have an example of it somewhere. Well, here's an II, sell climax and II, and reversal. Some traders will buy above that bull bar, some above the II buy signal bar, some above this bull bar. A pair of good-sized bull bars closing near their highs, you'll get some bulls buying that. Again, I'm not looking for a bull trend, but I think that the sell-off is so climactic that will probably evolve into a trading range. Small pullback bear trend lasted all day. A lot of smaller bars. Today it's bigger bars, so it's more likely to be a bear trend from the open that evolves into a trading range. Bear trend from the open and then trading range. Big bear trend and then trading range. Here a little bit up. Here, decent bull bars, so that reduces the chances of it going a lot lower. And we went a little bit lower, but sideways for the remainder of the day. Climactic like today, but we had some bull bars. That's what the bulls need, and sideways. So chances are we're going to be sideways soon for a couple of hours, possibly all day. Back above yesterday's low. Reasonable to get out of shorts. And some of this is bulls buying. A lot of it is bears giving up. We're stalling, tail, not going down far. We have a low on sell below 29, and we only went down a few ticks, 30, and the bears are disappointed and buy back their shorts. If you're quick, I was quick. I bought, just above 30, not with a stop, but at the market. And first leg up, it's going to be minor, so I'm going to be scalping part. I just get off part, and I'll be quick to get off the rest. Can we go outside up? Probably not. But we have a spike, pause, channel. So we should get here. It's also around the 2 averages. And it's a climax and a pretty good reversal. we should get a couple legs sideways to up. So bears, I would not sell below 31. I would not sell below 32. I would wait for a couple legs sideways to up before selling. Here, 2 legs up, 1 pullback 2. Then the bears might sell. Couple legs up, 1 pullback 2, pullback 3, or you could say 1 pullback 2, bull surprise, second leg up. Here, only 1 leg up, but then we got 2 or 3 legs up here. Here, a wedge bear flag. Here at the low, just 1 bar. Here, a couple legs, 1 pullback 2. 1 pullback 2 or 3. 1 pullback 2, 3. So you're looking for at least a couple legs up. Could be sideways instead of up. Bull surprise, we should get at least a small second leg sideways to up. And a trading range is more likely than a bull trend. The bulls are hoping it's a bear trend and then a bull trend. Well, we sold off so much with so many bear bars. Probably the best the bulls can get is back, maybe to the middle of the range. Is it always in long? I think it probably is. Normally, you need a couple bull bars. You want a couple closes above the moving average. But 31 is such a big bull surprise bar, and the context is good. We're probably going to get a couple legs sideways to up. It's probably going to be big down, big up, big confusion in a trading range. The market's looking for the top of the range. Maybe here, 25 at the start of this channel and at the 2 moving averages. Maybe here, the top of this, 9-bar bear micro channel, 9-bar bear sell climax. So somewhere between here and here is probably where this is going to end. Bears, I'd wait for at least a couple legs up before looking to sell again. When you get something like that, technically it was likely that we were going to get a reversal and a trading range. Fundamentally, it's usually due to somebody saying something. So, Powell may have said something. We're around a 50% retracement of the sell climax, and at the 60-minute moving average, if we sell off here, a 50% pullback would be here. We might test yesterday's low again down here, but chances are we're going to get a second leg up. The bulls are still hoping that 31 is a strong enough bull surprise bar to get the market back above the high of yesterday. We went below yesterday's low. Well, we went above yesterday's high and then below yesterday's low, so outside down. Usually, the common thing that happens is the market enters a trading range. I said that it was possible that we could continue down, but I thought it was unlikely because of all of these big bars. They're all climaxes. And when you have a series of climaxes, usually the market has a hard time continuing all day that way. It either enters a trading range or it reverses. Here, we're trying to reverse, but I suspect it's going to end up being more of a trading range. We might get back down to the 60-minute moving average again. There's really nothing to sell here. Bulls are hoping that it's a high 160 and that we get up there. I don't think we will. Here are examples of outside down days. The early ones here. The market went far below yesterday's low. That's not like today. I said most likely it would do something like this. Because of the climactic selling, you get exhausted bears, they stop selling, and the market either goes sideways or up. And today it's more of an up day. That's not what I'm looking for. Will we do this and continue down? I think we've seen both the high and the low of the day. Very strong rally. Could not get, actually, did it get back above the high? Let me check that. No. So this was a test of yesterday's high. It never went back above. This is kind of like today, except today's rally, I think, is stronger. The reversal up today is stronger. Outside up and down, and a couple big legs up, and then close somewhere in the middle. Same thing, close somewhere in the middle. You know, we got a pretty good leg up, close near the low. A little bit like today, two legs up, closed in the middle. So similar to this, outside down and reversal up, close in the middle. Another example, close in the middle. Another one, close in the middle of the day's range. So today is probably going to be like that. 60-minute moving average, we paused here, broke below it, not strongly, came back violently and got back above it, tested it. So the market's telling us that the 60-minute moving average is important today. Can you short below 60? I would not. We got a bull bar, 59 for your sell signal bar. You got 3 consecutive bull bars. For the bears, it's a failed breakout above the double top. And for the bulls, they're hoping it's a small pullback bull trend and that we continue up to the all-time high. It's not a good-looking sell, but you know, I suspect it's going to be spike pullback channel. It will come back down here, so another couple points below. I'm currently flat. I bought in here, I sold in here, and I bought here and scalped out and did not catch most of this rally. Micro wedge, 3 or 4 bars with tails at the 60-minute moving average, a 50% pullback. And then here, this is it's around a 50% pullback of the entire day's range. And this is a 50% pullback of this. It's also a spike pause channel. This is the start of the channel. So normally there'd be buyers there. So you got 3 things going on here: 60-minute moving average, and the 50% pullback, and the start of the channel after the spike up. So even with the 9 bear bars, there probably were going to be buyers here or not much lower. And then up here, we have a bull surprise, 57, 58. Might get a second leg sideways to up. It's possible 60 is all we get. I'm not short, I'm not long. I'm not going to buy above 61, a high 1. So right now I got to wait for things to become more clear. I think it's always in long, so it's more bullish than bearish, but I do not think we'll reach yesterday's high. High 2, pull back to the moving average, another higher low for the doji after 3 bear bars. It's more limit order type trading, buying below things, buying things that look bearish, selling above things, selling things that look bullish. I think we're always in long, so I'm favoring buying, but I'm not going to buy above 63. Too much risk, risking over 3 points, and how much reward. If you're lucky, you might make 2 or 3 points, but they sold above 52, they sold above 55, they sold above 39, and they'll sell above 59, and they'll buy below things. They bought below 61, they'll buy below 56, they'll buy below 53, they'll probably buy below 48. Looks like we're probably settling into a trading range for the remainder of the day. We might get, some trend up or down for 5 bars or something, but I think we're probably not going to break out of the day's range. I think we've seen the range for the day. On days like this, let me get rid of that, when it's probably not going to close at the high or low of the day, then you got to be thinking maybe the midpoint of the day will be the important price. And that's the midpoint of the day. The more today closes above the midpoint, the more likely we'll be sideways to up tomorrow. The more it closes below the midpoint, the more likely it will be sideways to down tomorrow. This is 3 sideways days already on the daily chart. So that increases the chances that tomorrow will be mostly sideways as well. Here's a 4-hour chart, very strong bull trend, and but no pullback in a lot of bars, not much of a pullback. So here we got a pullback similar to what we had last week, and then basically sideways for a month. And I think we'll duplicate that. We may go a little bit higher, but I think we'll get down to that low. And as you know, I think July is going to close below the open because I do not think we're going to get 6 consecutive bull bars on the monthly chart. That means we'll probably get a sell-off between now and the end of the month. It could happen in the final 2 days. July is not that big a month. And July opened here, so it's not like the market has to move very far to get back to the open. It does not have to move far at all. Back to the 60-minute chart. Spending a couple of days testing the 60-minute moving average. But bull trend. Working higher. So no matter what any top looks like, it's always more likely that any reversal will be a pause, a pullback, and that will go higher before we go much lower. So everybody, I'm saying we're going to get a bear trend on the daily chart, and certainly on the 60-minute chart, but that does not mean a bear trend on the monthly chart. I do not think we're going to get a bear trend on the monthly chart for a long time, a year, maybe more. Inside bar 64, inside bar 65, so another II. And we had that at 42. But most traders are better off, just waiting. If we get a bull inside bar 65, it's a credible buy. But how far up will we go? If we go up here, it'll probably be a wedge 1, 2, and 3. So I do not think we're going to get up there. And you buy above 66 if it's a bull inside bar closing in its high. I think we're back in this tight trading range. We have a tight bear channel with a lot of tails, a lot of small bars. We're probably not going to go very far up or down. So selling below 64 or 62, I would not. Buying above 61, I would not. 66, maybe if it closes on its high, but it's probably going to be disappointing for the bulls. They're hoping for another breakout like this or this or this, but we may end up getting a lower high for our head and shoulders top 1, 2, and 3. So when the market's like this, I think most traders are better off waiting. This happens a lot where you get a strong leg up and then a less strong, and traders are wondering when we get a third leg up, is this so strong so that we should get 3, 1 pullback, 2 pullback, 3, or did we lose so much momentum here with 9 bear bars and then here, so that maybe this is all we get? So it might be just 2 legs up, 1 pullback, 2, and then a couple legs down, 1 pullback, 2. Maybe get down to the 48 low and stay in this trading range. Nobody knows, but the one thing I think traders believe is that the market has slowed down greatly since bar 51, and we're probably not going to go very far one way or the other. Sometimes you'll get a buy the close or sell the close trend starting around 12:30, 12:35. It could start at any time, but that's a fairly common time. The market tries to do something going into the end of the day. Traders buying 66 are hoping for 31, knowing they're not going to get 31. They'll be satisfied if they get 49 or 57. and they know they probably will not get that either. So traders buying here are hoping for a swing. They buy hoping for a swing. They expect to get disappointed, and they expect to exit early. The bears are hoping this is a small pullback bear trend that will accelerate and that will test the low of the day. That's unlikely as well. But you can see a lot of the bulls are disappointed. Here we are a couple minutes into the bar, and we have not moved up. So some of the bulls will exit with a point or two loss. Excuse me, a tick or two loss. And that's part of what's going on right here. Other bulls will have to stop below 66 and hope that we start to get a series of bull bars and get above this high. They don't care if it's a wedge, 1, 2, 3. If it goes up here, they might be able to make 4 points or so. We had 2 bull bars here, and then a little bit more up. 2 bull bars here, no more up. You can argue why we closed bulls 58, disappointed 60. Never had a chance to get out break even, but they really did. 62 high, got back to